My name is Mohit Saini, student ID SKO30376. Today I'm going to do actually not me, it's a group presentation. So today our group going to do a presentation on the implication of international accounting in Australia after IFRS period. So it's a group presentation for accounting theory, and there are two other group members with me. I would like to introduce first my first group member, Binija. Binija, please join us.
Hi, I'm Binija and my student ID is ZMA 3026.
Right. And we have the other group member whose name is Dhairya. Dhairya, please join me.
Hi, my name is Dhairya Bhatt and my student ID is EBNN3192. Thank you.
Thank you, Dhairya. So Dhairya and Binija will continue later on. So let me start with the presentation. First, I would like to do the introduction. It's basically Australia is the first country who has adopted the International Finance Reporting Framework, which is also known as IFRS, and they have started doing it since 2005. So we have made this paper to Australia adopt these standards this research paper is written to inform the readers for the paper about the changes in the quality of financial reporting, changes in comparability of financial reporting, and especially the last part, which is the benefits occurred due to these changes. So let's continue with the next slide. So I'm going to discuss about few points, and in fact later on my group member is going to discuss about few points, which is the impact on accounting quality. The first point I would like to say is the conservatism. It's a basic accounting principle which suggests that the organization should record expected future losses and expected future incomes. So changes in accounting standard in the country change conservation accounting in financial statements. This adoption actually declined the systematic recording of expected income and losses. Now, expected income treated in the same way as the expected losses are treated in the financial statement. However, it declines the conservatism by the way of undervaluation of organizational resources, which is assets, and over-evaluation of organization obligation, which is liabilities. So the next one is the earning management. Earning management refers to the recording the financial transaction in such a way so that the financial reports will represent the higher earnings and the lower losses. All right. So the next will be the timely recognition of losses. It is very important to recognize the losses and the income on the timely basis. It should be on the same period, not on the different one. And the other point is the information affecting the market share price. Some information which can be affected the share price of the company is relevant to the shareholders and the potential shareholder of the company. So the next topic which I'm going to discuss today will be the goodwill impairment. Goodwill impairment accounted due to the reduction in the value of cash generating units comprising the goodwill, and in turn impairment of value of goodwill and due other reasons. The next of the slides will be discussed by my fellow group members, Dhairya and Binija. Thank you for today.
So the next point is accounting for deferred tax assets and liabilities. Tax assets created due to pre-recognition of income and revenue and post-recognition of losses and expenses in the taxable income calculation. Adoption of IFRS required the extensive disclosure for this account balance and specific disclosure for the deferred tax assets and liabilities created due to the valuation of the assets and liabilities. The next point is the accurate reliability. Accurate reliability refers to reliability of accounting information regarding the recording of accurate transactions. Adoption of IFRS enhanced the cost of reduction of accurate reliability of accounting information. The next point is the readability of financial report. Effective communication of the true financial performance and financial position cannot be made by the financial report or if such reports become lengthy and complex. So adoption of IFRS increase the length of some disclosure like significant accounting policies, intangible assets and other disclosures, but it does not reduce the efficiency of decision making of the user of financial report. The next one is matching of income and expense. Income and expense should be the matched by in the book of accounting period of the year. Adoption of IFRS in the country enhances the quality of matching the income and expense in the financial report significantly. The next one is the impact of the quality of accounting due to the effectiveness of the audit committee. The audit committee is a committee of the board director which committed for the use of good governance policy. Adoption of this policy quality did not enhance with the immediate adoption of IFRS, however it enhanced with the time. The next one is recognition of assets impairment. Asset impairment is a loss incurred by the organization with a reduction of the value the asset which identify after the making the impairment test of the assets. Adoption of this removes the issue of overvaluation of assets of the organization. The next one is the accounting for business combination. Business combination accounting changed the significantly in Australia due to adoption of IFRS. This result is in fair presentation the financial statement of the business combination. The next slides will be discussed by the manager. Thanks.
I'll be presenting with the last part of the presentation. My topic is impact on comparability of financial reports, and it has 3 points: voluntary disclosure, financial ratio, and choice for the accounting policies. Voluntary disclosure is when any false or misleading information or mistakes or omission in return or statement has been lost. New Zealand and Australian organization have enhanced the voluntary disclosure for expense in the post-IFRS period. Financial ratio statement has also been impacted after IFRS period. It is a tool of making a comparative analysis of the financial statement. Choices for the accounting policies. Adoption of IFRS resulted in the reduction of the diversification of preparation and presentation of financial statement. The next topic is impact of international financial reporting standards implementation on information quality. The information quality can be measured in terms of the publication source having the information about the changes in accounting standards. After implementation of IFRS, the information quality can also be perceived through the reflection of the various terms in case of international standards. The next point is benefits after adoption of IFRS. It has 2 points: analyst forecast and information flow. The studies revealed that analyst forecast became more accurate after adoption of IFRS, and that resulted in good decision making, which further resulted in profitability of the organization and investors. Information flow. The implementation of IFRS resulted in synchronization of finest information and stock market trends. After the adoption of these standards, organization performance as per financial reports gets synchronized with the stock movement and stock returns of the organization on Australian Stock Exchange. As for the conclusion, we can conclude that IFRS adds various qualities to the financial statement of the organizations like better conservatism, timely recognition of loss, providing information affecting the market share prices, to name a few. It also adds the benefit of better comparison between the global organization, accurate forecast and better information flow, and also enhances the earning management of the system of the organization. Thank you so much.